If you've been watching the GTA real estate market and wondering whether 2026 is the year to act or to wait, you're not alone. 2025 was anything but normal. Political uncertainty, economic disruption, and shifting confidence levels created a market that felt stuck. But as we step into 2026, the data is starting to tell a clearer story. Happy New Year, everyone. I'm Dean, and I'm back for another video where we break down what's really happening in today's commercial and industrial real estate market. Today, I'll break down what actually happened in 2025, what's changing now, and what this means for investors, business owners, and anyone planning their next real estate move. 2025 was truly a tale of two markets. The first half of the year was dominated by uncertainty, federal and provincial elections, trade and tariff concerns, and a general lack of clarity around economic direction. That uncertainty had a direct impact on buyer confidence across the GTA. Total home sales dropped by just over 11% compared to the year before. At the same time, new listings increased by about 10%. That tells us something important. Sellers were active, but buyers were hesitant. Prices softened as well. The average selling price for 2025 landed at roughly $1.07 million, down about 4.7% year over year. But this slowdown wasn't evenly spread across the market. Freehold and low-rise homes were the strongest performers in 2025. Detached and semi-detached properties continued to attract demand even in a cautious environment. Condominiums, on the other hand, struggled, especially high-rise and pre-construction projects. Many launches were delayed, resale inventory climbed, and price pressure was most noticeable in this segment. What's interesting is that interest rates were actually coming down under normal conditions. Rate cuts would stimulate activity, but in 2025, confidence mattered more than borrowing costs. Buyers weren't just waiting for cheaper money, they were waiting for stability. Now, let's talk about what's changing in 2026. Most economists expect interest rates to remain relatively stable this year, with possibly one additional cut. But again, rates aren't the main story. The bigger shift is confidence. We're seeing more political clarity, improving affordability compared to recent years, and rising awareness that sales activity has been sitting well below long-term averages for several years in a row. Based on population growth alone, GTA sales should be closer to 90,000 transactions annually. We've been far below that benchmark, which means pent-up demand is quietly building. As confidence returns, even gradually, that demand doesn't disappear, it comes back into the market. Looking ahead, different segments will recover at different speeds. Freehold and low-rise properties are expected to lead in 2026. Limited future supply and steady demand could create a narrowing window of opportunity before competition increases again. Condominium resale inventory is expected to be absorbed slowly, particularly by first-time buyers who are priced out of freehold options. Pre-construction condos will take longer to recover as developers work through existing inventory and face higher construction and development costs. In the rental market, renters are seeing more choice in the short term, but new supply remains limited, and THAT's expected to put upward pressure on rents later in the year and beyond. So what does all this mean if you're an investor, business owner, or decision maker? In 2026, we're in a market that's stabilizing but not fully recovered. That often creates opportunity for those who move early before broader momentum returns. If you're planning to lease, acquire, sell, or reposition a commercial or mixed-use asset this year, understanding these shifts is critical. The market isn't frozen, it's recalibrating. If you found this breakdown helpful, make sure to like, subscribe, and share. And if you want market insights tailored to your specific real estate goals, feel free to reach out. Thanks for tuning in, and I'll see you in the next update.